Good evening. I'm back. Um, just got done. Just got done moving from one state to another. As you could see, this cluster behind me. Yeah, barely breaking into my or getting into my house or one of them anyway. The one I'm gonna live in. So back in Texas, back in El Paso, Texas. Um, a lot of traction from the last video. I thank everybody for subscribing and getting views and getting a little more traction and asking questions and so forth. So let's do a little update real quick for the portfolio, and then we'll talk about some of the Crocs earnings. So here we are. I think the last video that I posted about SoFi, when I pulled up the portfolio, we were up about a little under 40%. We were at 39%. Now we're at a 45% gain unrealized on this portfolio. Typically, what I like to do with this portfolio is I usually fund this thing. I usually put a couple grand or so a month in. This month I'm not going to be able to, unfortunately. I got hit up with a lot of one-time expenses related to the move, so a lot of my cash flow got eaten up by those expenses. However, there I do have some tailwinds coming in, and some taxable events. So later on, to add to the family's balance sheet, I'm sure my wife is going to want to wet her beak, and with when the liquidity comes in anyway. And I'll try to compensate here and there by funding this portfolio later on this year, but on track to hit six figures this year. I wouldn't be surprised if we hit that goal. But never can tell. We'll see. I'd hope so. I'd hope we hit it. So, um, recovering from the little weather, still a little bit under the weather, but for the most part, recovered. So, let's look at what we got. Crocs reported earnings today. The stock is starting to run, and it was just a matter of time before this thing started running. Now, I want to talk a little bit about my mentality on the sentiment on how I do things. Okay. Um, and a lot of other investors, what they'll do is the stock will run up. It'll shoot up, right? It'll shoot up on our earnings. And this thing was like $100 or so. Earnings comes in, bam, we're up, just like 20% or 12% on the days you could see. And but I'm up around a little over 20% on the position. A lot of investors would take gains. They'll take they'll take profits when on these run ups. What I do is I like to do what everybody's not willing to do. Okay, I delay gratification. I'm a long term investor, so I work harder and I work smarter. I get the capital. I take the risks that other people are not willing to take, and into these positions, and not only a risk that other people aren't willing to take, but mostly what institutions are not willing to take. Okay, and then when the gains come, I do what a lot of investors are not willing to do as well. On the other side, I delay gratification. You see, I think that's where a lot of the alpha is, when you delay your gratification. And that's not even just related to just the portfolio and investing mentality. I'm talking about life as well. All right. So if you can go in, take the risks that others are not willing to take, get the capital in there, and hold long and delay gratification. The longer that you hold a stock, especially as long as the company's fundamentals are good and they're performing and the valuations keep going, the value keeps increasing, it's going to be good. Your value will increase. All right. So I built this Palantir position out about a year ago, and then I worked on Crocs. I got that done. The market was not respecting Crox's valuation, so I had decided to double the position to 20,000 invested. Um, and then I moved on to SoFi. I got the 10G capital invested, as if you've been following along. And then next up, I'm going to be working on Planet and Navitas. All right. So um, Tesla is a little bit on hold for me. We'll come back to that later. Um, but yeah, that's pretty much it. I'm a long-term investor. I don't On these little run-ups, I do not take any profits. All right. So I have I have enough capital gains events happening this year, and with my income and all that, honestly, I'm okay with just not taking profits. If I wanted to realize and get cash flows, maybe I'll get some dividend stocks or something. But I'm really not interested in that right now. I'm more interested in capital appreciation and growth of capital. This is a growth portfolio. All right. Um, okay, so let's talk about Crocs. All right. Now you see the position here. I invested 20 G's. I'm up a little over 20%. So we got a little over 4 grand of unrealized profits. I think, excuse me, I think that, Palantir, although the weighting on the portfolio is mostly Palantir, um, I have a hunch that Crocs is going to overtake Palantir, not in the percentage gains, but the actual percentage weighting. So I think Crocs will double. And then, it's possible Crocs goes to 250 a share from here. So with how fast they're deleveraging, we'll talk about that in a sec. But but yeah, I think Crocs is going to start running. It'll go up and down, but I think we're well on the way. Maybe a few more quarters, and this thing is gonna be up there. Okay, so Crocs. All right, let's talk about the earnings for a few minutes, and then so forth. So um, here's little highlights. They paid off a bunch of debt in 2023. I guess this is the devil's number or whatever. It's the 666 million, and they paid 277 million in Q4. Okay, so 666 million of debt repaid off, and they are actually in there. Let me pull this a little bit more. So they're in the actual goal of their net leverage. All right, and they bought back a little bit of stock. They bought back a very minimal, modest 175 million. Honestly, I would have been okay if they would have just took that 175 million and just added it onto the debt repayment. But whatever, you get a little value. That's okay. You need to boost a little EPS. That's okay too. They still have 875 million authorization remaining on the buybacks, which I think they might speed up the buybacks this for 2024, as that's the capital allocation priorities. Good earnings. Margins are looking good. Little bit of compressing margins on the Hey Dude sector brand, or brand sector, if you will. But that's to be. I was expecting that. Um, there was a there was like a one-time $10 million cost or whatever. They're moving their headquarters from out of Colorado to somewhere else. We'll see where they end up moving it. I think. I'll have to do more research, but I hope they move it to Texas. Just like pull a lot. Like what are the other companies are doing? They're all moving to Texas to get better tax treatment. And hey, it is what it is. Capitalism over here at its finest. So, um, their 2024 guidance. Their revenue guide is 3 to 5%. I think they're lowballing. As you can see, they're guiding Q1 2024 for -23 and 20% revenue growth on the Hey Dude brand. The Hey Dude brand is only a portion of the revenues. However, I think they need to fix the. It's going to take the whole year to fix this Hey Dude situation. It's not going to affect. All of this is going to be priced in. So the recovery of the Hey Dude brand situation is going to be priced into the stock. Where the stock is so cheap that it doesn't matter. We're going up from here. When they deleverage this much, eventually the debt markets will re-rate this stock. They'll re-rate the company's corporate credit rating, and they'll up the credit rating so the cash flows will be seen as safer, more consistent cash flows. And the market, excuse me, will realize, and I think they're already starting to realize, that these cash flows are here to stay, and this isn't just a fad. All right. So I think we'll get multiple expansion and we'll continue to get growth. Um, I'm okay with Hey Dude just being taking the whole year to for them to fix that whole situation, with the distribution and protecting the brand integrity and all that, and getting better pricing on the products. So yeah, good earnings, good year overall for Crocs. I think the more they deleverage is part of my original thesis. If you've been following along with my prior Crocs videos, Crocs is one of the staple core positions in my portfolio. um, how do you say? I guess, yeah, Crocs is the foundational position. So I'm not going to be surprised to see a steady incline in stock price for Crocs, um, as long as they continue to pay off debt and buy back shares and use those free cash flows. As soon as the free cash flow, and as the market is starting to realize that the deleveraging is, they're doing a lot of deleveraging. So right now the free cash flows have been going to the debt market. So the shareholders haven't been benefiting the cash flows, or benefiting from the cash flows that are entitled to them, because they've been going to pay down debt. That's going to change soon. So I knew it was just a matter of time. I'm holding long on Crocs. Hey, comment down below what you think about Crocs, and what you and how you think I'm doing as an investor. And some other, maybe some other ideas on some other companies or what have you. Thank you all for your support. It's going to take a while for me to clean this place up, as far as like organizing things in my new house or whatever. Um, but hey, thank you all for your time, and have a good night.